All right. Welcome back to the SteadyTrade Podcast, everyone. I am Tim Bohen, the host, and back with Matt McCall here. So, guys, it's been a few years. I'm going to start out this episode kind of catching up to where we've been for the last few years. One thing I would like to do right off the bat is want to thank Kim and Steven, my former co-hosts. We had an amazing run, man. A lot of you might be seeing this episode show up in your feed or maybe seeing it on YouTube, and you might be wondering where the podcast went. Like, we had a great time, man. And I really appreciate everything that Kim and Steven did. And we did 226 episodes. Some of them got hundreds of thousands of downloads. And it was a great time. Now, next thing a lot of people ask is, well, why did you quit? And, to me, it was basically we just kind of ran our course. The joke I like to give is like, listen, Magnum PI, by far and above the greatest TV show in the history of television. I don't even want to hear a debate. Magnum PI ended, okay? Cheers ended. Seinfeld ended. Friends ended, and it wasn't because they weren't still making great episodes. It was just kind of like, we're done here. And that's kind of where it was with, talking penny stocks, every week. We didn't miss a week for over 4 years, like all the time. And it just kind of ran its course. So I would like to thank all of you for being there for all of those episodes. And I mean, I still get comments. Like, people are like, when's it coming back? And, we ended it 3 years ago. So thank you for all of you for all the kind comments and being there for all those episodes. But again, we just kind of ran our course. So now we're back mainly because I really miss podcasting. Like, I really enjoy it. You guys all know my love of Joe Rogan and all of that. But I really like longer form type stuff. Most of what I do, is like kind of like, a fast trade breakdown on YouTube or on X or whatever. And it's all kind of rapid fire. Hey, here's the stock. Here's the plan, blah, blah, blah. And, just because it's, a lot of the social media is just kind of attention starved. And so you got to be fast. So I really kind of missed podcasting. So I'm glad to be back. And we're going to take a little bit of a different direction. So I know a lot of the previous episodes, we had a lot of amazing guests like Jim Rogers. I mean, it was pretty wild to have Jim Rogers from Singapore. And we're going to have guests again. But what we're going to do with Matt is really kind of talk more like big picture stuff. Because I know one thing I didn't like about the past podcast is a lot of the times we would be talking about like the stock du jour of like that day. And a lot of you might only get this episode maybe hours later, or maybe you can't listen to your commute, or you can't listen for a couple days. So what's great about long form on the commute or on the treadmill is we want to still give you actionable ideas, actionable information, but a little more big picture. I mean, those of you that trade penny stocks, which right now is probably a lot of you, like Lucy was incredible on Friday, an artificial intelligence stock. Our algorithm predicted it at 26 cents and went up 300%. But today, guess what? Lucy's down 40% today. It's kind of, the run is over. So what we want to do more is kind of put stuff on your radar so that you can be aware of themes and sectors and what's going on in the trading world. And what's great, those of you that still trade penny stocks like I do, is remember, these stocks move based on themes, and these stocks move way more than, listen, look at NVIDIA. Okay. Obviously NVIDIA is up 300% in a year. Lucy, an artificial intelligence stock, moved 300% in a day. So if you know how to identify these themes, you can be in front of them. So that being said, let me kind of jump over and give a brief introduction of Matt. So Matt's been working in the investment industry for nearly 25 years. So his career began in 2000 as a stockbroker at Schwab, and a mere 4 years later, he founded his own investment firm, Penn Financial Group. As a serial entrepreneur, much like me, Matt has founded and sold several businesses, including a broker-dealer, a crowdfunding startup, a publisher, and even a fitness company. Matt's written 2 books, with a third slated to be released in early 2025. Matt's passion has always been the world of investing, much like me. It's kind of crazy how our bios kind of overlap. But today, Matt is concentrating on the 3 pillars of investment research for the individual investor: education, have fun, and making money. And that's really the goal of this podcast: to educate you, have some fun, and ultimately, ideally, give you the tools and the education to help make you some money. So as the world is entering another phase of massive innovation, and that's our topic for today, investors cannot ignore the investment opportunities in front of them. So that's why you're here. So basically to take my 18 years of experience and Matt's 25 years of experience to educate you, have some fun, and ideally put you in front of some great opportunities. So sorry for the long introduction, guys, but I really did want to update everyone because I know a lot of you might be getting a notification on your phone right now that there's a new SteadyTrade podcast. I'm still subscribed on my phone. So I did want to kind of take that time to thank all of you for sticking with us all these years later. And then I really wanted to reach out to Stephen and Kim because I had a great 4 or 5 years, 226 episodes doing this podcast with them. That being said, I'd like to welcome you, Matt. How's it going, my man?
Thank you so much, Tim. Thanks for the great introduction. Happy to be here. I've been off the air since October, and I've been itching to get back here in the studio. And it's great to be on. And it's pretty crazy. I'll tell a quick story about you and I. We're both grown men, and it's not easy for grown men to meet people they get along with a lot of times, especially we're both alpha males. Sometimes that could be a problem. So the powers above us said, we're going to put the two of you together for this podcast. I said, that's great. Let's give it a shot. And I remember I was at my house in Nicaragua sitting outside, and we met and we talked like we knew each other for 20 years right off the bat. And then fortunately, a few weeks later, we got to meet in person in Florida. Again, felt like I've known you forever. So I'm super psyched for this, for what we're going to offer as far as the education, having fun and making money. But also I think the fact that I think we're going to get along really well is going to pull a lot of great stories and anecdotes as to how our investing works together. Granted, I'm much longer term, still like the small companies, but you're shorter term. But that being said, Tim, I feel like we still approach things a very systematic way where, yes, Lucy on Friday, but it's within the AI realm that's moving. I look at that as great for long term. So I think a lot of these innovation topics we're going to talk about, Tim, you're going to be like, you're right, Matt. You like some of these other ones for the next couple of years, but I like some of these smaller ones for maybe a day or two. And yep. I think that there's going to be a great kind of overlap of what we're doing here. And keep in mind, when I managed money for 17 years, I managed majority of the people's money, but they always had the 5 or 10% they played with, penny stocks, options, other things. So I know most people watching have a little bit of both in them. They're a long-term investor for their IRA, but they still like to gamble a little bit. Not that it's gambling, but they like to be a little more aggressive, I should say, with some of their other money. So I think this podcast really is going to hit the head for almost everybody out there that's in the investing world.
Yeah, and that's one thing. Like I talk to a lot of people. Like listen, as much as I'm known as a penny stock guy, listen, if you know how to identify the right themes, like I think back to this was a couple years ago, Enphase Energy. It was like $7. And I was like, guys, I love this as a long-term hold because of what was going on back then. Basically, and I was telling people about it because I'm like, listen, there's all of this money flow going into this stuff. And that thing went from now obviously didn't go straight up, but it went from $7 to $245 in 9 months. So those are the type of opportunities where, especially it's not bad. And that was a stock that, if you look at the chart, it was almost on autopilot. Sure, it had red days, but it'd be red for 2%, and then it'd be green the next day. So that's another thing I'm excited to bring because a lot of our audience initially is going to be probably a lot of, penny stock type people. But I always think that man, you're missing out on some great opportunities by not following these themes.
Yeah, and the themes you talked about, not to get too into the weeds with that specific theme, but Enphase being a solar company, you've seen recently solar companies are moving again because their thought process is we're going to get closer to the Fed eventually lowering interest rates, which helps a lot of these smaller sectors such as solar. There's a lot of small names, down around $2, $3, $4 a share that are moving, that are really moving. So if we see that money coming into the sector, boy, that just puts a wind at your back, Tim, when you're looking to play those on the long side.
Yeah, and actually that's kind of our topic today is we're going to be talking about a lot about AI as well as energy. So good segue, by the way, into today's topic. So oddly enough, speaking of energy and the booming, so I actually just went and got my blood work today, and so right around me, a couple miles away, there's 5 or 6 solar farms going in right now. And this is rural northern Michigan. And to me, it's pretty crazy. I went by this one site. So I'm I think most of the listeners know, I'm like a weekend handyman. I like to get my hands dirty. I've got a skid steer. I got a Kubota tractor. I got all this gear. But I go by this site and there's I mean, no joke. There was 34 brand new Bobcat skid steers. I mean, not a single scratch on them. Like excavators, like all of this brand new gear. And I'm like, I wonder how these guys are buying all this brand new gear, man. Yeah. Like not a single thing had a scratch on it.
That's crazy. And I'll use that as a segue, as our second segue in. The topic we're going to talk about today, Tim, is really everybody's talking about AI. That's the mega trend right now. It has been for, let's call it 18 months or so, maybe 24 months. NVIDIA's been the leader, or at least the face of it. It's been the face of this move for the most part. But a lot of the big 7 stocks have moved all along with it. But when you have a trend that big, I'm going to take this and equate it to, let's say, the internet or
I think it's bigger.
Mobile phones, right? Like it's going to be potentially bigger than the internet because it's going to affect. I mean, the internet affected everything, but this will truly. And we saw how quickly it's happened since ChatGPT came out less than 18 months ago, or about 18 months ago, I should say. But we have to look then at what other sectors will move with it. I'm not saying you missed the move in NVIDIA, but you missed that first big move, in my opinion. So we look at all the data that AI drives. How much data? I used ChatGPT today. You had asked me for a bio, and I went in afterwards. I was like, I'm going to ask ChatGPT. I said, give me a bio of Matt McCall in 200 words, the investment, I hate the word guru, but that's how it comes across the internet. It was on point. I mean, it was on point. But the amount of energy that takes is mind-blowing. It's not your normal Google search. So I've been doing a lot of research on this lately, and I'd love to get your thoughts on this. But to me, these data centers that you're seeing built up all over the place, you see a lot of them in Virginia and Atlanta are probably two of the big hubs that you see here in the United States. The amount of energy that these data centers suck up, especially now that they're AI driven, is unbelievable. Recently came out, Tim, that between now and 2050, you're going to say, well, Matt, that's 26 years. I get it. But global energy demand is supposed to be up 165%. Global energy demand normally goes up about 1% a year. Like right. It's usually ticking up very slow. And this is really driven by two things. Majority of it's AI data centers. Also the middle class in the East is growing as well. And in Africa, you're seeing a lot of come from there. But there's right now is about 8,000 data centers throughout the world. This number is going to more than double, if not triple or quadruple in that time frame. And 2022 data centers accounted for about 2.5% of all electricity demand in the United States. They're saying that by 2030, so 6 years from now, 5.5 years, that's up to 7.5%. Again, this is something that came from zero and is now suddenly 7.5% of all electricity demand here in the United States, which is why you drive by and see that solar, because we need more energy. But I gotta say, when you talk about the solar in northern Michigan, it doesn't seem economically viable as a place, especially in the winter when the sun's not that strong, it's not out that often, we don't have the energy storage yet to harness that. So you end up getting what? 15% of that energy actually makes it to where it needs to go?
Yeah. So again, longtime listeners know my fondness of, the U.S. federal government. And yeah, on a side note, I'm sure you're and the listeners are familiar with the topic, government boondoggle. Like to me, these solar farms are a complete in northern Michigan. Okay. Like, listen, when I fly to Vegas and I see solar panels as far as I can see from the plane, I'm like, okay, I get it. It's the desert. What's wild about Michigan. And actually, I grew up in Gratiot County, Michigan. Actually, some of the most expensive farmland outside of Iowa is in Gratiot County, Michigan, where I grew up. Okay, my family farm is on that dirt. Okay, and what's crazy to me is these solar farms are going into farm fields. Like you're taking, useful dirt to produce food for livestock and people to replace it with solar panels when it is cloudy 9 months out of the year. So that might be a topic for a completely different podcast. But listen, I look at it like the money is out there. So I'm sure there's some contracting company in Michigan that's like, hey, if they're giving out money, then I'm going to build them in Michigan. And hey, once I build them and move on, whatever. But yeah, it's wild to me to see it around here. I just think it is it's a boondoggle in my opinion. So
yeah,
build
I'm
them
sure
in the
there's some
desert
government
in
money
Vegas,
behind that, helping facilitate that for sure. Ireland, my family's from Ireland, but they believe that by 2026, a third of all their power will be dedicated to data centers. And again, you think of Ireland, right? That's one of the countries you don't think there's going to be solar or anything. So how are they going to power this? They're going to need fossil fuels. And this goes back to an argument that, we could have, I think we're probably on the same side here, but you could have with a lot of people on let's call it the left, where get rid of fossil fuels. We just can't yet, because if we don't have enough energy, you cannot push AI forward because the data centers will not be able to run, because an AI data rack takes 7x the power of a normal traditional data rack. Then what happens? The entire world's innovation stops, because innovation's being built on AI. In the next 5 years, we're going to create more data, consumers and businesses, than we created in the last 10 in 5 years. We're going to double it. And we've seen those graphs before of data being created, right? It's bananas. And we can't move forward as a humanity without innovation. We can't do that without power. Where's the power come from? Don't get me wrong. If you told me right now, Tim, hey, we could turn on solar and not have to do anything, dig in the ground, cause anything, and just do it, sure. It's just not realistic. It's not realistic by 2050, which all these governments want. It's just not realistic. So we need to consider, when we think about AI, one of the sub investment opportunities here is oil and gas, believe it or not. You wouldn't put the two together, but it is.
Yeah, and I know that might be surprising to some people, but listen, I'm a big believer in oil and petroleum. I mean, listen, I think that a lot of this has been created as scare tactics, et cetera. But peak oil was supposed to be 40 years ago. And here we are, you go back a few years ago and the U.S. had record production, produced more oil than anyone else in the world. And there's constantly all of these discoveries. So instead of, moving off yet, maybe we can just do it in a better way. But I just think that would he just leave it in the ground and not use it? I don't understand the point,
And the other thing is, Alex Epstein, I don't know if you've never read any of his books, The Fossil Futures, the second one. I interviewed him on the podcast last year.
It's funny, I was going to bring that book up. Great book, by the way. Alex Epstein,
it is a great book.
Fossil Future, yes.
Yeah, it is a great book. And I don't care if you think you should stop oil production today. I always read both sides. I'm sure you do too. I want to have both sides of the story. And when it comes to energy investing, honestly, I do a barbell. For my long term, I have oil and gas, and I also have renewables, because when you're being backed by the government, we know there's going to be more solar panels tomorrow, the next day going forward. We know it. So there's going to be more EVs on the road, whether the growth slows or not, there's going to be more. So you need to invest in that too. You can't ignore that. However, from my standpoint as an investor, what we're going to try to get across in this show, we'll do this research for you, Tim, you and I, and then present it. And then you make the decision from there. We're not saying go only invest in oil and gas, only renewables. Here's the case, the honest truth that you're not hearing from the mainstream media. You go make the decision, your investments from there.
Yeah, and then the other thing you had on your list is cooling, okay? So going back to when I started my business, early 90s, so we're an internet provider. One thing we did very smart, so we the first 5 or 6 years, we bootstrapped everything, okay? So we basically, we didn't take our first loan for 5 years. So we bought all of our gear on eBay, every piece of gear. We didn't buy a single piece of new gear until 7 years in. But then one of our biggest struggles, and we constantly struggled with this. So we would put in not a data center, but a network cabinet, like a telco cabinet, 19 inches wide, couple feet deep. And we would put that, in all of these individual towns where we put equipment. And our number one issue was cooling. We would be fine in the winter. It's Michigan, we'd be fine. So typically we would put this equipment in a back room of a business. We would and this is another thing we did. We'd be like, hey, we'll give you free high-speed internet, because we'd bring our high-speed line in if we can put our equipment in your back room so that we could do local number access, okay? But then the summer would come around and it would be like a back room with no AC or whatever. And it was a constant battle. And listen, we were bootstrapped. Like we're like screwing window air conditioners to like the side of this cabinet. Because the more we grew, like we would have to actually stop installing new equipment because the cabinet would keep overheating. We'd have to pull stuff back out. And it was for years until we got bigger and then we kind of centralized to one data center. Cooling was a constant struggle. And keep in mind, I'm talking about like 4 or 5 pieces of equipment in this cabinet. I'm not talking about 10,000 rack mounted servers.
Yeah, and Intel came out and they said that right now, cooling accounts for 40% of all the power used in these data centers. And what's crazy is costs for cooling are supposed to go up about 16% annually over the next couple of years. So it already accounts for 40%. It's going up more. So to me, let's just kind of take this from the top down. We know AI is growing, right? And there's nobody can debate that. And we're in the early stages of that. We know it demands an enormous amount of energy, more energy than the Earth's ever seen demanded before. We know that we have a problem with the grid. We know we have a problem with supplying that, right? And we know we need to have data centers for this to keep going. So we're breaking our way down. Now we're at the data center level, Tim. Now we know, okay, cooling is a major issue. It takes up almost half of all the expenses. It's going to grow faster than all the other expenses to run these data centers, 8,000 plus already out there. Why don't we look at investments that can play this cooling? That's how we're going to break this down. And there's a couple out there. And the first one I'm going to mention, I'm sure many of you know, super microcomputers, SMCI is a symbol. It's kind of NVIDIA's little cousin, right? NVIDIA kind of got the headlines, but SMCI was right there along with it, outperforming really NVIDIA. I mean, it's been one of the biggest winners in the stock market over the last 2 years. They're a leading producer of these data center servers, but they also have an extensive range of these cooling solutions, and
which is something I did not realize. Like until and actually I've been trading SMCI, and I didn't even realize they had branched out into cooling. Like even though I was trading NVIDIA or SMCI, and we were talking about it every day, I was simply speaking from my past experience. So back at my company, about, once we started buying new gear, we exclusively used super micro servers. I loved them. I was always, my partner was kind of more like the software guy and I was always the hardware guy. So like, that's kind of how we balance stuff out. So I would, spec and purchase the gear and then I would install it. And then he was more the software guy. So we almost exclusively use super micro, and this is the 90s, okay?
It's amazing. Yeah, back then when you left, it was about a $200 million company. Now it's a $52 billion company. Just to see how big something can grow.
I guess I should have took some of my proceeds from the sale and put it in the super micro.
Super micro, exactly. Another stock that a lot of people, if you're in the market.
But back to the cooling thing.
Yeah,
I kind of interrupted you there.
Yeah.
So where I started was I didn't realize they had branched into cooling now.
Oh, yeah.
So if you want to touch on that.
Yeah, I mean, I don't want to get into the weeds too much with just that because I think it'll be over most people's heads, probably over my head, honestly. You'll be the one who knows more than I do. But there is another company that's a little more concentrated on the cooling solutions for data centers, and that's Vertiv. VRT is a symbol. Again, if you follow AI, follow data centers, you're familiar with probably both of these companies. This has been, again, one of the biggest winners over the last couple of years. I mean, this stock last August, Tim, was below $15. Now it's 105, and that's that's a hell of a move for a company that's not huge, but it's big enough. So they're big into cooling, and they have deals with all the big names. So they've been holding up real well. And I'll give you one more smaller name in here to keep an eye on. This company's nVent, which is NVT, is their symbol. And they make electrical components for the cooling. So you're kind of almost taking the step even lower down for the cooling. Over 40% of their data center division revenue is expected to come from liquid cooling. So they're actually getting a pretty high portion as well. And again, you look at that stock, just last August, $40, now it's 84. It sounds terrible to say it only doubled, but you're seeing how these stocks have moved. And if you looked at them on a long-term fundamental basis, a lot of them still aren't even close to as expensive as a lot of the other big names out there you think are safe stocks. And these are actually holding up really well, even though, and to me, they still have a lot to go on the upside from here.
Yeah. So, I mean, yeah, like the big things that I keep seeing, that you mentioned earlier too, is like infrastructure type stuff. Like, again, I run a swing trading program, and, we had a killer entry on FCX, Freeport McMoRan a couple months ago. Again, a lot of people, I think, overlook a lot of these things because they're kind of like boring type companies. But, you look at the upgrade, again, all of these solar panels around me are in the middle of cornfields. Okay. They got to get wired to those. How do you get the power out? You can't use a laser beam. Okay. You got to get copper to them. Transformers, like, again, back to renewable energy. My mom has a windmill on her farm. The transformers is bigger than my truck. Okay. Like they set it with a crane. Okay. Imagine all of the copper and the wire and the components that go into that. And I just think I see all of this coming online in a very brittle, infrastructure environment in the U.S. I mean, again, I live in a rural area. I mean, I go by some poles, and you could tell that pole is like 60, 80 years old. And sure, I'm in a rural area, but I don't think it's any better in a lot of the, cities as well. A lot of this infrastructure, 100 years old, maybe even older. And when you start bringing these places online, it's like you flip on this massive air conditioner and the lights dim, and I just think that when you look over the next couple of years, because, listen, I'm a huge bull in AI. This is going back to a little bit of my history again. Like, I started out always as a technology guy. Like, I had an Apple II. Okay. So I was there around the boom of the PC. I was there for the boom of the internet. I saw the iPhone happen. I saw all of these and was working in these industries. And I look at what the things that AI can do and the growth of it. I think it's going to make all that look like a joke. So we can't go back. We can't go back unless we're just going to turn the lights off. So all of these things need to happen. And whether that be private spending or government spending, there's just going to be a massive amount of money flowing into this space.
Yeah, I mean, I just finished up an article that should be out in a couple of days on copper. And, most people follow me. I'm always like the innovation guy, but in reality, I own copper stocks. I recommend a bunch of copper stocks at my last company. It's a simple supply demand. I basically wrote and said, this is simple economics 101. If anybody's ever taken it, you don't even need to have it. It's supply demand. When supply is stagnant at best, demand's going through the roof because of all these renewable projects, batteries for EVs, transmission lines. It's the best thing for conducting electricity. Nothing's going to replace copper. Prices go up, and we've seen copper prices hit year highs just last week. A little pullback, but we've seen copper prices go up, and we've seen copper stocks go up. FCX has been a big winner. That's a whole other show we can do on the grid, because the grid is a play again on AI. The grid has been terrible. We all know this. It's been terrible for years, if not decades. But now we're actually forced to do something. And, there were storms that went through a few days ago that went through Texas and the Southeast. As of, I think it was Tuesday afternoon or so, there's still 1 million people down there without power. Temperatures are in the mid to high 90s right now. I'm in Florida and temperatures through the roof. Can you imagine not having power right now? And yeah, it's a storm, but the thing is, storms are getting stronger. Infrastructure cannot handle it. We can't get back online. Texas a couple years ago was almost shut down when that ice storm hit it. Literally shut down for months because our grid sucks. So this is going to cost us trillions of dollars.
That winner, the owner of StocksToTrade, I mean, he was out of power for 2 weeks. Yeah, 2 weeks.
It's just unbelievable. And again, I don't want to be the negative guy, because there's optimism to this. Is we need to upgrade it. We're not a third world country. I live, for the most part, in a third world country. I know what infrastructure is like. My power goes out every day, and I'm on the best grid there is. It still goes out every freaking day. So I know what it's like, but we shouldn't have that United States. And I think
they're also not. They're not going to. Number one, they're not going to build a data center there. Yeah.
No. I'd like to. Hey, trust me. If they do, I'm calling you first, because we're going to hook it up. We're going to get you back in the. Get you back into cooling systems and help us out there. But 2 other stocks I'm going to share, then we'll wrap it up for the day. Obviously, I have a lot more on the list, but we can't get to them all. But, this also is electrification. Everything's being electrified. So you have to look at some of these big name players out there. Eaton, which is ETN, they're a power management firm, but they're a huge player in electrification. they get about 14% of their revenue from data centers. And I think that number is going to expand dramatically in the next couple of years, next decade or so. So again, you're looking at these secondary plays that are needed as data centers continue to expand and the need for electricity continues to expand. Another one's a European company, Schneider Electric. It trades here as an ADR, so you can buy it, SBGSY. They're in electrification and cooling as well, a major player in Europe. So you want to diversify your portfolio. You can't always be in the United States. So you look, and they're the major player in Europe. They get about 20% of the revenue, but they're also big into cooling. So you got a little bit of both, the electrification and the cooling. Big into data centers, probably the biggest player when it comes to this niche in Europe as far as data centers are concerned. And again, you look at the chart of those two stocks, Tim. I mean, lower left, upper right, just how you want your stock. Nice momentum going higher. So I just think it's funny. A few years ago, Tim, I was so excited about flying cars and other things. I'm still excited about flying cars, EVTOLs. But it's amazing now what we've seen with this AI boom, all these secondary plays. And a lot of them have to do with copper, with rare earths, with battery storage, with utilities and data centers, things that you don't sound sexy. But man, oh man, you can't argue the performance and you can't argue the demand that we're going to see in the next 5 to 10 to 20 years. It's hard not to put some of these in your portfolio.
Yeah, and again, so I'll kind of take it home a little bit here, but so I know we talked a lot about these big picture ideas, and I love all of these stocks. Again, I've traded some of them, but keep in mind, a lot of you guys that are in small caps, like these things feed off of these big names. Like a lot of people always ask me, especially in small caps, they're like, well, how do you identify what is hot? And I'm like, look at the hottest big name stocks. Like, okay, sure, you probably can't trade SMCI with a small account unless you're dabbling in options or NVIDIA. But you look at all of these others that run with that, because what happens in small caps and in speculative markets is, experienced day traders recognize this and they pile into what we call these sympathy plays. So that's why we want to bring you guys this stuff, because number one, you can trade longer, swing trade, or even invest in a lot of these stocks, but it's the best way to spot the next big momentum play so that you don't hear about it afterwards. Okay, like I think about a year ago, right about now, a year ago, we had that incredible artificial intelligence run in small caps. I mean, we had every other day. It was hilarious because it's classic small caps. Like you'd have like weed stocks pivoting to AI and stuff, like and pushing out press releases and stuff. But the crazy thing is, if you know how to day trade those things, man, those are the ones that go 300%. But then a lot of people missed all of that. They missed all of that because they weren't following, well, back then, AI, the ticker C3AI, was driving all of that. C3AI went from like $3 to like 50 in 2 weeks. And because we knew about it, we were like, hey, all these small caps are feeding off that. So if that stock's too high priced or moves too slow for you, we can ride this run. And then what happened was C3AI finally kind of pulled back and kind of went into nowhere mode. And then all the small caps fizzled out. And then people kept trying to trade them. And I'm like, listen, guys, we had our 2-3 month run here. It's time to move on to the next sector. So that's what we're trying to do with a lot of these podcasts. That's the new goal of the podcast, is to put you in front of these big picture ideas so you can trade the big names if you want, or you can be aware when you start running your scanner, your day trade scan, and you start seeing these little utility crappy $2 stocks popping off. That's something you want to keep an eye on.
Yeah, I love it. And it's, you would never think back, or I wouldn't think back in a day, sitting down with a day trader, guy who looks at penny stocks, low price, and what I do it would actually work. And again, we didn't know each other a month ago, and already it's going to work. It is working. This is such. It's really going to honestly help any trader, any investor. This is something that again, I love that how you just described that top down, because again, with all those penny stocks out there, one little edge helps, right? This is just one more edge we're giving you.
Yeah, and that's one thing. Like it's kind of funny you say that, because when I talk about this kind of hybrid approach, a lot of people, especially like newer day traders, they kind of look at me a little weird. And I'm like, listen, a lot of people just think it's like you just pick some random stock and it happens to go up 300%. Well, listen, penny stocks do crazy stuff every day, but the ones with the most sustained moves, the one that put in all day moves or even multi-day moves, are always following the head of the snake. That's what we call it in day trading. And typically what happens is, the head of the snake gets cut off and then they die. Okay. But if you're trading random poppers, like that's why I think a lot of people have a hard time trading these small caps, is because they do that. They just see something up 100% and they buy it. There's no news, there's no sector momentum, and then they get bagged. And listen, these stocks move fast, so you always have to have a plan, you have to have a stop loss. But the best day trades, and that's what I teach everyone, is look for these themes and then look for that 30, 40% mover that's moving with that theme. And then that becomes the all-day mover or even the multi-dayer. And it's a simple thing, but I think it's something a lot of people really overlook. And they just trade these random poppers and they get bagged all the time. And then they're like, oh, small caps suck,
Yep. I've been there. I've tried it. I've been there.
Yeah. Well, everyone, we'll take this home. So, a couple things. Again, I would like to thank everyone for coming back. Again, I'm sure a lot of you are probably getting a notification. To all of you that are new, listen, Matt did a bunch of amazing research for this. I want to commend him for that. One thing I will say, back when we were doing the SteadyTrade podcast, man, we had a lot of fun, but we really just kind of winged it. And we kind of just, we brought up the stocks du jour of the day. We broke them down. We talked about a lot of great stuff. We taught a lot of people. I'm very proud of that podcast. But like what we want to do really now is, again, do that due diligence and do that work to really put you guys in front of the best opportunities from $1,200 stocks down to 12-cent stocks. So, and again, I'd like to thank you, Matt, for joining me, and really looking forward to this. So I would like to, my goal is that we do this for many, many years, and this is just the first episode, so we'll keep getting better. So
sounds good. Thanks, Tim. Looking forward to it, buddy.
As always, I actually forgot to mention this. Listen, I know like your podcast app doesn't really have comments, but this will be going on X. Okay, I'm really excited about X and long form content. This will also be going on YouTube. We'll probably put it on Facebook. So give us some comments and let us know what you think. Like we really want to build this thing with all of the listeners. So drop that comment, share with your friends, like the video, and Matt and everyone else. I'll see you next time.